A pleasant afternoon to everyone who joined this webinar. I'm your speaker for today's session. My name is Faith Abdon, Client Engagement Coordinator, and here with me to address other queries and clarifications are Ms. Rafi Jahangir, our Senior Accountant, Ms. Cheryl Ilagan, Operations Supervisor, and Mr. Sadiq Nadim, the Managing Director and Co-founder of our company. For the new joiners, allow me to introduce our company. We are from AMCA, Abdullah Al Marzuki Chartered Accountants, an auditing firm in UAE with decade-long of experience. We are a licensed auditor under Ministry of Economy and approved tax agent under Federal Tax Authority. For today's webinar, we will discuss the comparative analysis between value-added tax and corporate tax. We hope that everyone will get better understanding of these taxation systems as implemented in the UAE. Now, we will start the discussion. On the first part of this webinar, we will discuss the definition and overview of value-added tax and corporate tax. Second part is the comparison of VAT and corporate tax. And the last part will be the question and answer portion. You can drop all your questions on our chat box, then we will answer it at the end of this session. Value-added tax or VAT was introduced in the UAE on January 1st, 2018. VAT is a tax on the consumption or use of goods and services. A VAT of 5% is levied at the point of sale. Businesses collect and account for the tax. In effect, businesses will be collecting the tax on behalf of the government. VAT will provide the UAE with a new source of income which will be continued to be utilized to provide high-quality public services. Tax rates are zero-rated, 5%, and exempt under certain conditions. We will tackle this on the later part of discussion. Corporate tax is a form of direct tax levied on the net income of corporations and other businesses. It is sometimes also referred to as corporate income tax or business profit tax in other jurisdictions. Introducing a corporate tax regime also reaffirms the UAE's commitment to meeting international standards for tax transparency and preventing harmful tax practices. Broadly, corporate tax applies to the taxable persons. Tax rates will be 0% and 9% that we will talk about on the next slides. Let's move on to the main topic, which is the comparison of VAT and corporate tax. As I have mentioned earlier, VAT is indirect tax imposed on goods and services. The end consumer ultimately bears the cost, while corporate tax is direct taxation on the net income of businesses. Both taxation's regulating authority is Federal Tax Authority. So once registration is successful, businesses will get their unique tax registration number on the same authority portal. There is certain criteria for registration with VAT. So it is mandatory to register for VAT if the taxable supplies and imports of a UAE-based company exceed 375,000 dirhams per annum. Meanwhile, VAT is optional for businesses whose supplies and imports exceed 187,500 dirhams per annum. For corporate tax, there is no certain threshold for registration. As long as you are a taxable person, you should register with corporate tax. A taxable person in terms of corporate tax can either be a resident or non-resident person. At the end of each tax period, VAT and corporate tax registered businesses should file their return to Federal Tax Authority. Tax period for VAT is usually 3 months or quarterly, while tax period for corporate tax is 12 months or annually. Taxable businesses must file their VAT returns with FTA usually within 28 days of the end of the tax period as defined for each type of business. A VAT return summarizes the value of the supplies and purchases a taxable person has made during the relevant tax period and shows the taxable person's VAT liability. If there is no business transaction for the tax period, you are required to submit a nil VAT return by the respective due date. So for example, as per your TRN number, your tax period is January to March 2023. Then, FTA will give you grace period of 28 days. So you will need to file VAT on or before April 28, 2023. For corporate tax, taxable persons are required to file a corporate tax return for each tax period within 9 months from the end of the relevant period. The same deadline would generally apply for the payment of any corporate tax due in respect of the tax period for which a return is filed. For example, your financial year is January to December. So your corporate tax period will start on January 2024 to December 2024. Then FTA will give grace period of 9 months. So you will need to file on or before September 30, 2025. As a prerequisite, every person who conducts any business, whether they are registered for tax or not, should hold the following documentations and records. These documents should include accounting records with entries on payments, receipts, purchases, sales, profits, and expenses. The aforementioned records must be kept for a minimum of 5 years after the end of the tax period for VAT. For the taxable person who owns real estate, records relating to the real estate must be kept for a period of 15 years. For corporate tax, records and documents should be kept for at least 7 years following the end of the relevant tax period. Two or more taxable persons who meet certain conditions can apply to form a tax group and be treated as a single taxable person for VAT and corporate tax purposes. Those who register for tax groups can do their payment or returns as a single entity. The following eligibility criteria must be followed for the FTA to grant permission to form a tax group. So for VAT tax group, there is 5 criteria. So first one is business criteria. Each member must be carrying on a business. Second one is legal person criteria. Each member of a tax group must be a legal person. Example, they must be a company, a government entity, or similar. Third one is establishment criteria. This can be accomplished by having either a primary establishment or a fixed establishment in the UAE. A primary establishment is usually the place where key management decisions affecting a business are made. A fixed establishment is a place which possesses the necessary human and technical resources sufficient to carry on a business. The fourth and the last one will be related parties and control criteria. So every individual member must be related to the others, meaning that they share economic, financial, and organizational ties. Within a VAT tax group, one member must have control over the rest. Control can exist on certain conditions, like for example, at least 50% voting interest in all the companies, at least 50% market value interest in all the companies, and the last one is control by any other means. Control exists also when two legal persons or where each of them is a related party with a third legal person. Let's move on for the corporate tax. So to form a tax group, both the parent company and its subsidiaries must be resident juridical persons having the same financial year and prepare their financial statements using the same accounting standards. Additionally, to form a tax group, the parent company must own at least 95% of the share capital of the subsidiary, holds at least 95% of the voting rights in the subsidiary, and is entitled to at least 95% of the subsidiary's profits and net assets. The ownership, rights, and entitlement can be held either directly or indirectly through subsidiaries, but a tax group cannot include an exempt person or qualifying free zone person. So how is VAT collected? VAT registered businesses collect the amount on behalf of the government. Consumers bear the VAT in the form of standard rate of 5% increase in the cost of taxable goods and services they purchase inside the UAE. Suppliers do not charge tax on a zero-rated or exempt supply. For zero-rated sectors, VAT will be charged at 0% in respect of the following main categories of supplies: exports of goods and services outside UAE, international transportation and related supplies, certain healthcare and educational services and related goods and services, certain means of transport such as trains, trams, vessels, airplanes, aircrafts or vessels designated for rescue and assistance by air or sea, certain investment precious metals. If you make supplies at the zero rate, this means that the goods are still VAT taxable, but the rate of VAT is 0%. You will need to record any zero-rated supplies in your VAT account and report them on your tax return. As per Ministry of Finance, Corporate tax will be levied at the headline rate of 9% on taxable income exceeding 375,000 dirhams. Taxable income below this threshold will be subject to 0% rate of corporate tax. For your convenience, I will provide an example of a corporate tax calculation using this 9% rate. For instance, the company's net income is 500,000 dirhams. Then, we will subtract 375,000 dirhams. The amount of corporate tax will be calculated as 500,000 dirhams minus 375,000 dirhams, which is equal to 125,000 dirhams. As a result, the 9% will be calculated on 125,000 dirhams. A free zone person that is a qualifying free zone person can benefit from a preferential corporate tax rate of 0% under qualifying income only. In order to be considered a qualifying free zone person, the free zone person must maintain adequate substance in the UAE, deriving qualifying income, not have made an election to be subject to corporate tax at the standard rates, and comply with the transfer pricing requirements under the corporate tax law. To give a brief information about the qualifying income, these are income derived from transactions with other free zone persons, except for income derived from excluded activities. Income derived from transactions with a non-free zone person, but only in respect of qualifying activities that are not excluded activities. Last one is any other income, provided that the qualifying free zone person satisfies the de minimis requirements. Exempt supplies are not taxable supplies for VAT purposes. VAT is not charged on exempt supplies, and the supplier cannot recover any VAT on expenses incurred in making those exempt supplies. So if all the supplies you make are exempt, you do not have to register for VAT. The following categories of supplies will be exempt from VAT, like the supply of some financial services, which is clarified in VAT legislation, residential properties, bare land, and local passenger transport. On the other hand, as per Ministry of Finance, certain types of businesses or organizations are exempt from corporate tax, given their importance and contribution to the social fabric and, and economy of the UAE. These are known as exempt persons and include government entities, government-controlled entities that are specified in a cabinet decision, extractive businesses and non-extractive natural resource businesses, and qualifying public benefit entities. The main purpose of certain income being exempt from corporate tax is to prevent double taxation on certain types of income. Specifically, dividends and capital gains earned from domestic and foreign shareholdings will generally be exempt from corporate tax. The registration in UAE allows a taxable person or a business to cancel their registration and suspend their tax registration number or TRN. You must mandatorily deregister for VAT in case where you have stopped conducting business, whether by dissolution or liquidation. Your taxable turnover is less than the voluntary registration threshold limit of 187,500. You may also apply for the registration on a voluntary basis where your taxable turnover exceeds the voluntary registration threshold limit of 187,500 but is still below the mandatory registration threshold limit of 375,000 dirhams. You must submit the application for the registration from VAT within 20 business days from the date of occurrence of the event that requires you to register with the FTA. To complete your VAT deregistration, you may need to file your final return as per the prescribed time limit provided by FTA and complete the payment of the outstanding liabilities. Following approval of your deregistration application, your VAT registration number or TRN would be deregistered and you will be notified by mail. You can download your VAT deregistration certificate from your Emara tax account. For corporate tax, a person with a tax registration number shall file a tax deregistration application with the authority where there is a cessation of its business or business activity, whether by dissolution or liquidation. Businesses can only be deregistered when all tax returns have been filed and all corporate tax liabilities and administrative penalties due have been fully settled by the person. If the tax deregistration application is approved, the authority shall deregister the person for corporate tax purposes with effect from the date of cessation or from such other date as may be determined by the authority. Lastly, we will talk about the penalties. The threshold for VAT registration is 375,000 dirhams. When the application regarding VAT registration is late, a penalty of 10,000 dirhams will be imposed. For corporate tax, there is no penalty yet for late registration. A registrant who fails to submit the VAT return within the time frame specified in the tax law is bound to pay a penalty of 1,000 dirhams in the first instance and a fine of 2,000 dirhams if the offense is repeated within 24 months. For corporate tax, failure to file a tax return will penalize 500 dirhams for each month and 1,000 dirhams for each month from 13th month onwards. Tax registrants need to take extra care to remember the dates of filing of their taxations. For VAT, if the registrant submits an incorrect tax return, a penalty of 1,000 for the first time and 2,000 dirhams in case of repetition. For corporate tax, penalty will be 500 dirhams unless the person corrects his tax return before the expiry of the deadline for the submission of the tax return according to the corporate tax law. Failure of the registrant to submit a deregistration application within the time frame specified in VAT law and corporate tax law and its implementing decisions is 1,000 dirhams and on the same date monthly thereafter to a maximum of 10,000 dirhams. The penalties mentioned for corporate tax are in reference to Cabinet Decision number 75 of 2023, administrative penalties for violations related to the application of taxation of corporations and businesses. Thank you all for listening. You can now post your questions on the chat box and we will addressing it after a few minutes. Thank you everyone for spending your valuable time in joining this webinar. Please feel free to contact us through our website, email, and landline number that is flashed on the screen. See you all on the next webinar and have a great weekend.